Hey guys, welcome back to the channel. So today we'll be exploring the unique business model of Credit Access Grameen Limited, one of India's leading microfinance institutions. We will explore its financial performance, key business strategies, and we'll be diving deep into its operations. So Credit Access Grameen operates on a joint liability group (JLG) model, specifically designed to cater to the financial needs of the rural and semi-urban poor. This model is crucial in mitigating credit risk as it relies on collective responsibility within the group of loan givers. The company's operations predominantly targets women, who account for 99.98% of their borrower base, focusing on economic empowerment and financial inclusion. So, what is a JLG model? A group of 5 to 10 women come together to form a joint liability group, and loans are provided to each member, but the group collectively guarantees the repayment. This model not only reduces default risk but also fosters a sense of community and shared responsibility among borrowers. So, if we look at the financial performance of the company and the highlights of FY24, so the revenue, the Credit Access Grameen's total income stood at 5,172 crores in FY24, an impressive 45.7 year-on-year growth, and the gross loan portfolio of the company stands at 26,714 crores, a 27% year-on-year growth from 21,000 crores. And if we talk about the borrower base, the borrower base expanded by 15.3% year-on-year, now covering 49.18 lakh customers. If we talk about the loan book, the company continues to diversify its loan portfolio with a specific focus on empowering women through income generating loans. And if we talk about the non-income generating loans, these loans now account for 15% of the total loan book, showing the company's strategic focus on income diversification. So if we jump to the asset quality and capital adequacy ratio, so the GNPA, the gross NPA, improved significantly, reducing to 1.18% in Q4 financial year 24. And the net NPA also saw a reduction, standing at 0.35%. And the CAR ratio, the company maintains a robust CAR ratio of 23.1%, well above the regulatory requirement, ensuring a strong capital buffer for future growth and expansion. So now let's talk about the profits and margins. The company recorded a stellar profit after tax of 1445 crores in FY24, a 75% year-on-year increase. And for Q4 2024 alone, the profit stood at 397 crores, representing a 33.9% year-on-year growth. And if we talk about the return on assets, which is ROA, for Q4 2024, the ROA was 5.7%, a key indicator of how well the company manages its assets to generate profits. And the ROE for Q4 2024 was 24.9%, demonstrating efficient utilization of shareholders' equity in generating profits. So, if we talk about the net interest income, the NII for FY24 stood at 3,259 crores, reflecting a 45.9% year-on-year increase. And the interest spread for Q4 2024 was 11.2%, a rise of 98 basis points year-on-year. And the net interest margin, the NIM, expanded to 13.1% in Q4 2024 from 12.2% in Q4 financial year 23, reflecting an increase of 91 basis points year-on-year. This growth in NIM indicates the company's efficient management of lending and borrowing costs. So you may ask, what is NIM? So NIM is a critical profitability ratio that shows the difference between interest income earned from loans and the interest paid on borrowings, expressed as a percentage of the company's assets. It essentially highlights the company's ability to manage its interest costs and revenue from lending, which is vital in maintaining profitability. So next, we'll be focusing on the PPOP, which is pre-provision operating profit, a significant financial metric. PPOP indicates the company's earnings before accounting for provisions and contingencies. Credit Access Grameen's PPOP for FY24 was 2390 crore, marking a 58.7% year-on-year growth. And for Q4 2024, PPOP was 682 crores, up 35.8% year-on-year. And next, if we look at the total borrowing of the company has maintained an efficient borrowing to support its financial loan portfolio. The AUM, which is the asset under management, the company's gross AUM reached 26,000 crores, representing a 27% year-on-year growth. And let's now jump to the expanding branch network and the digital transformation and innovations. So, Credit Access Grameen expanded its branch network by adding over 300 new branches in FY24, taking the total count to 1,967 branches across 3. So, if we talk about the social impact and CSR initiatives, Credit Access Grameen's borrower base consists of 99.98% women, emphasizing its commitment to financial inclusion and women empowerment. So the company spent 12 crore on CSR activities, directly benefiting 2,41,000 individuals. A total of 1.82 million man hours of training was conducted with an average of 57 training hours per employee. So they are heavily focusing on the CSR initiatives. Next, if we jump to the credit ratings of the company holds a strong credit rating of AA stable from CRISIL, ICRA, and INT-RA, reflecting its financial stability. And Credit Access Grameen has received the client. So let's now move to the technical analysis of the stock. Looking at the chart, Credit Access Grameen has been on a strong upward trend over the past few years. The stock recently corrected from its all-time high of 1800 to around 1186 rupees, which represents an interesting entry point for long-term investors. So the stock is currently near its critical support level of around 1180, and if it holds, we could see a bounce back towards the 1400 to 1500 range. Also, Motilal Oswal, the famous broking company, has given a buy rating on this stock of around 1450 as a target. So on the upside, the immediate resistance is around 1350. A breakout above this level would see the stock resisting its previous highs. And the 50-day moving average is currently below the 200-day moving average, signaling a short-term bearish trend. However, given the strong fundamentals, this could be a good time to accumulate the stock on dips. Also, the company's Dutch owners are selling their stake for 2.5 billion pounds. So keep an eye for that also. So, Credit Access Grameen is well positioned for future growth, with plans to further expand its branch network and deepen its digital initiatives. The company aims to increase its loan book by 20 to 25% annually over the next few years. Additionally, with the company on recovery path, there is a strong likelihood that the rural incomes will improve, providing a tailwind for the company's growth. Given these factors, I recently added Credit Access Grameen to my portfolio, confident in its potential for both steady returns and capital appreciation. I have invested around 50,000 in the stock. So you can still buy the stock. It is available at a good discount, and do your own research before investing. So thank you, and if you like the video, please